You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 30th day of January, 2023. Hope you had a great weekend. Whoever you are, wherever you are, we're just glad to have you right here, right now. Happy Monday. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern every trading day. Now that particular broadcast is reserved for members only and those who are taking their 1-week free trial. When Michael pops on in a few minutes, he'll show you exactly how to take your 1-week free trial. There's no credit card required, and you'll have access to the live room, to the platform, to the indicators, to one-on-one mentoring sessions, around-the-clock support, everything our lifetime members enjoy. You'll have access for 5 consecutive trading days. And again, no credit card required. We invest our time, our energy, our money, our resources in you so that you can figure out if you have what it takes to become a trader. And at that point, you can make a well-informed, intelligent decision if what we do is right for you. We take a 30-minute break at 11:30 a.m. Eastern, and we come back for the afternoon broadcast at 12 noon Eastern. That would be this broadcast right now. And there's 2 different ways to join the afternoon broadcast. Now, this broadcast, unlike the morning broadcast, is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. I'm going to give you the better way first. You only have to do this once. Go to mytradingiq.com. Scroll down to where it says Afternoon Broadcast. Click the link. Complete the 30-second registration form. And then every trading day going forward, you'll get an email about an hour before the afternoon broadcast starts. And at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. I say it's the better way because it gives you access to the question box so you can ask questions and participate in the discussion. Now, there'll be days that you're out of the office, away from your desktop, or maybe the go-to platform audio drops. Whatever the case, just point your browser to our YouTube channel, which is very easy to remember. You already know youtube.com. Just add a /CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive every daily broadcast. Currently, there are over 2,100 daily live broadcasts archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just what we say today, but you can scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick days at random. Just listen in. you'll find a thread of connectivity, a thread of continuity that's woven through each and every daily broadcast. It's really the best way to get to know not only what we say today, but what were we doing and saying 6 weeks ago, 6 months ago, a year ago, 2 years ago. It's all right there at your fingertips. You just have to devote some time. If you're not willing to devote the time and to do the work, then becoming a trader is probably something you should think twice about. To become a consistently profitable trader will take time, and it will take work on your part. There's no silver bullet, there's no holy grail. You actually have to learn how to trade if you want to call yourself a trader and earn money like a consistently profitable trader. So again, we foot the bill for a whole week so that you can experience everything we offer. And then at the end of those 5 consecutive trading days, that's when you make your decision. With that said, let's get rolling on this Monday. We'll open with a word of prayer. Now, the past few days, we've been going over the top 5 success principles of Job. Yes, that Job, the one who was tore up from the floor up, lost everything, and then God restored twice as much. Today's scripture is Job 31, verses 21 through 23 from the Message translation. This is Job speaking. If I've ever used my strength and influence to take advantage of the unfortunate, go ahead, break both my arms, cut off all my fingers. The fear of God has kept me from these things. How else could I ever face them? Again, this whole study is based around Job 31. Now, on Friday, I believe it was, we talked about sexual impurity. And of course, our minds go, well, what does that have to do with success in business or leadership? Well, if you'll study Job 31, you'll find out. And that's what we're doing. We're covering the top 5 success principles that we find in Job. Number 2 is no unjust action. As a successful, wealthy person, considered the greatest among his people, Job would have had tremendous influence over those all around him, including government officials and judges in the court of law. There was no one greater than Job, and the respect he had from his society must have been tremendous. Even so, Job's second top 5 principle is not to take unfair advantage of others. He emphasizes this by pointing out he would not even take advantage even of those least able to defend themselves. Job's objective was never to accumulate wealth to the disadvantage of the poor and weak, regardless of how easy that might have been. Instead, he wanted to be upright and equitable in all situations, even though others might profit at the expense of the weak. And in doing so, his reputation was stellar. Job 29:11-12 says, "Whoever heard me spoke well of me, and those who saw me commended me, because I rescued the poor who cried for help, and the fatherless who had none to assist them." The building of Job's enterprise surely required his focus and attention over a period of years. All that time, Job stuck to his principles. never forgetting that his life, business, or leadership was about much more than wealth or success. Job knew reputation mattered, just as it was written by wise King Solomon many years later in Proverbs 22:1. A good name is to be chosen rather than great riches, and favor is better than silver or gold. Today, a good reputation is still a valuable asset. However, abuse of the less fortunate is far too acceptable, and unjust treatment of the poor is readily tolerated in our society as acceptable. Think of the clothes you wear, the coffee you drink, or even the smartphone you use, and how these may rely on the systemic abuse of those less fortunate. Even in your own country, those with greater wealth and influence, like Job, game the system, manipulate the law, restrict the abilities of others, and even take action to suppress the voices of those less fortunate. If Job were alive today, he might raise the bar for fairer and more equitable treatment of those less fortunate. In his absence, he leaves this principle for you and I to do the same. Join me in prayer. Heavenly Father, thank you for the amazing truths that we can learn from the book of Job and the knowledge we have gained about the spiritual war that has been raging in heavenly places since the fall of man in the Garden of Eden. Thank you that you work all things together for the good of those who love you, and that no matter what sufferings we may have to undergo in this fallen world, you will use it to teach us more of your character and even more about ourselves. Keep us from engaging in human wisdom or allowing worldly philosophies or legalistic tendencies to adversely influence our understanding of your plans and your purposes. And God, help us to hold fast to our integrity. Like Job, when we do not understand why difficulties have arisen in our life. This we ask in Jesus' name. And everyone said, Amen. Amen. All right. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's down 48 points. NASDAQ's down 136, which is a little over 1%. S&P 500 is down 25. The Russell 2000 down 13. Now there's a reason why the indices are in the red, and when we go to the daily chart here in a bit, it'll be quite obvious. In the commodity basket, crude oil's down 77 cents, trading 78.91 last. It's a drop of almost 1%. Gold down $5.80, trading 19.39.80 last. Silver up 15 cents, trading 23.77 last. In the Asian markets at the close, Nikkei up 50 points, Shanghai up 4.5. Now Hang Seng, after multiple back-to-back days in the green, the Hang Seng got hit hard today, down 619 points, almost 3%. In the European markets at the close, FTSE up 19, the DAX down 23, the CAC down 15. So that gave us a mixed day in Asia. It was a mixed day for the UK. And so far, it's a big red radio Monday here in the US of A. So we'll go to Michael if he's ready and get a recap of what happened this morning in the live trading room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, just type it in the question box, and either Michael or myself will be happy to answer it for you. How you feeling, buddy?
I don't know. I gotta take some more medication, I think. Some more Advil, cold and sinus or something. I'll be alright, though.
Get some rest, man.
Right.
Take care of yourself.
Yeah, I will. It'll just take a couple of days. It'll be alright.
All
right.
Take it away.
Here we go. Good afternoon, everyone. Today is Monday, the 30th day of January, 2023. If you've not taken a free trial with us, just go here to mytradingiq.com and right here sign up for your free 5-day training, 9:30 to 11:30 Eastern time. If you're gonna sign up for the training, you should go here and download the trading platform. Okay. We actually just recently, if you go in here, when you sign up for the training, you now have an opportunity down at the very bottom to give us your machine ID for NinjaTrader or your TradingView profile name. Okay, so you can do that right at the time you sign up. All right, that'd be great if you give us that information. We can get you set up right away for your trial with the indicators. All right, but you should definitely go to this page and download whichever trading platform you use. Okay, whichever one you use, download it there. Go check out the trade rules. These are the rules that we follow in the room in the morning. Every single morning, we follow the same exact rules again and again and again. All right. There's some videos of me following those rules. Those videos are from last year now, but we'll put more recent ones up there this year. Okay. All right. So the spreadsheet now. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. I don't know what's going on here. There it is. Okay, so today, as I said, is the 30th day of January 2023. We made 15 ticks in crude, 14 ticks in gold, and 8 ticks on the ES this morning. That put us at 390 on the morning session. Today it took 1 minute and 3 trades to get to $250 a contract, and we took a total of 13 trades. So on the month now, we're at $8,067. It's over 19 trading days, averaging $424 per contract per 2-hour trading day. We've now gotten a goal in 18 out of 19 days so far this year. And we've traded about 6 hours so far this month, getting our goal, and we are now at $2,402. If you quit trading when you got your goal for the day, you would be averaging about $400 an hour as of this month. Now, by the end of the year, if we can keep that average at about $400 a month, by the end of the year, that's how we ended last year with $4,800 a month. Okay, so what I'm saying is, if you could average $400 an hour, just quitting when you get your goal for the day over the month. That's what it turned out to be this month, and that's kind of what it turned out to be. You know, if you multiply everything times 12, you divide that by 12, it comes out to about $400 an hour at the end of the year. So for the whole year is about where we are right now. The average on this month is about what it was for the whole year last year. I guess that's what I'm trying to say. Anyway, I'm starting to ramble. Okay, so let's get into the trades that we actually took. Okay. On the gold, all right, our first trade was right in here. I was drawing this in to illustrate what we need to do to change context on this chart, and we need to get down below this level. We did right here. We took a short trade right there, ended up with a break even. Now we got into kind of a mixed up spot in here because it tried to change the context back to up right there, but it didn't. So I took this red off for red right here, and on that one we picked up 10 ticks, and then we had a follow-up trade right here. I got 4 more ticks. I was showing things this morning. Let me bring this back up. This morning, I was trying to go back and forth between the TradingView charts and the DT Pro charts to show where things were actually similar and we might have been able to get in earlier using these charts. So we had the same trade set up in here, right? That was at 11 o'clock. Then right after we had the next one. We had this one right here, right off of red. That was the same one. But in here, you wouldn't have had the other one. You wouldn't have had it until down here at 40.2, where with the trading view chart, you would have had it right there, a whole bar earlier. I pointed that out this morning while it was happening, and I took some profit on this trade here based on DT Pro charts anyway. But I just wanted to kind of try to keep track of that this morning. There was one more trade right here during the break on the gold, and over here we didn't actually get that extra trade. Okay. Hang on. Okay. So that was it for gold today. Now, crude oil. I wanted to look at the big picture on gold too. Just want to show you this. It was in and out of this weekly trading zone pretty much all morning, mostly in it all morning. Crude oil had some big movement today too. See, we're looking at all these places where crude could go if it kept going up, but it went up and it hit this point here, and then it failed right back off of that. It started out down here, and then my midpoint was right there, and I said, okay, if it gets through that, we'll go up to the BBC. And we got to the BBC and through the BBC, and then I was looking up here at 70, 79 change. I was looking left over here is what I was looking for the high of the day. We went up and tapped that high of the day, and then it failed right off that, right back down to the weekly trading zone. You see that that's what it's working on now. If it does eventually start to go up, this is a huge woo spot that we're going to probably see sometime this week. But the trades that we did take in here, let's go back here. All right, it was all this movement in the pre-market that I missed. And then we had a break even here. Our first trade was a break even there. Our next trade was plus 15 right there. And then we had another break even right here. And that was all we did with crude oil. It looks like there was a trade right in here at 11:02, and a couple more in here. This one, was it this one I didn't want to do? No, that one went 4 ticks in profit. Didn't end up with anything else in there. We could do it with DT Pro. It did make a huge move down here right before and during the break. Didn't give any trade setups on the way down that you could actually do off the BBC, off the ribbon. And it had to change context to get anything on the long side. It gave one blue off of blue right here. That was the crude oil today. So we ended up with just 15 ticks on the crude. The ES we're back and forth on quite a bit. Scroll back here on the ES. All right. So we started off here with a break-even trade, and then this was the one that I told you I had gotten 6 ticks on one and then 14 ticks on the other one, all kind of together. The 6 ticks I had gotten from this trade right here that I had accidentally left the order on, and the 14 ticks I had gotten from this one right here that actually triggered. And altogether they came up to 20 ticks. The very next trade I took was right here. It was a mistake. The cycle was going down too steep, and I went long, and it stopped me out right away, reminding me of my mistake. So I was at 10 ticks then. Then I picked up 4 more there, I think, and got to 14. Another 4 there and got to 18, and then I stopped out again. This was an actual stop out, though. This was a valid stop out. I took the trade. Everything was good about that, except for going right into a weekly trading zone. Everything was good about that. So that brought us down to 8. Okay, and then I had 1 break even there, and that was where we ended up for the morning session. I was doing training when all this happened right in there, and I didn't take another trade. During the break, we would have had a bearish context in here, so I'd been looking for shorts over here. There was 1 there. Not a lot happening during the break with the DT Pro charts. Now, if we jump back here to the trading view charts one more time, and we look at what happened here with the trading view charts. I'm just going for bounces off the BBC with the trading view charts, not continuation trades. Okay, so let me slide this over some more and this over some more so you can see a little bit more of it. Also, those of you guys who are using TradingView, if you want a copy of my layout, just let me know. There's an easy way to send you a copy of my layout in TradingView, okay? Really, really easy way to send you a copy of my layout in TradingView. So just let me know if you want a copy of this Okay. Actually, I'm gonna go put a copy of it on the website at some point. Maybe today. Maybe not today. We'll see. But anyway, in here, just looking for the bounces off the BBC with where everything was right. There was one right there, one right there. One there, there, and there, and there. And then it flipped around, and there, and there, and there, and there. It tried flipping around again in here, but it didn't quite make it until over here. And then there was one right here that would have stopped you out eventually, I think. Okay, and then it was going back and forth in here, and this was during the break now. This is all during the break where we didn't get anything on the DT Pro charts. We had one there, one there, one there, one there, and one there. All good trades. And on the long side, it just gave one right here. You could have taken for a profit. And back on the short side, another one there. Those would have been together. And another one right here. Could have just grabbed that nice short right there too. Okay, those are the trading view charts. So the trading view defining the context for you takes a lot of the work out of it, a lot of the thinking out. Makes it just a lot easier. See, like right in here, first of all, we would have had to decide that this is in a bearish context, and then we would have had to draw trend lines. Would have started with a trend line, something like that, but the slingshot was all crunched up in there, so we wouldn't have gotten anything until all the way over here. Okay, that's where we would have gotten that short, as opposed to like right here with the trading view chart. Anyway, let me get the question box out. I hadn't even brought the question box out yet. And see if there are any questions. Okay, there are no questions in the question box. So with that, I'll bring this back up and we'll go back to the spreadsheet first. Now, if you've not taken a free trial with us, I'm sorry, on the spreadsheet today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of January 2023. Made 15 ticks in crude, 14 ticks in gold, and 8 ticks on the ES. That put us at 390 on the morning session. Today it took 1 minute and 3 trades to get to the goal for the day. At that point, we're up 250, and we took a total of 13 trades this morning. Okay, so on the month now, we're at $8,067. So we're going to end the month probably around $8,267 or $8,467, somewhere around there probably. Our daily average is $424, maybe $8,500 if we hit the average tomorrow. And that's over 19 days, and we're averaging 424. If you were to quit trading when you get your goal for the day, did you guys hear that funny noise? If you were to quit trading when you get your goal for the day, and yeah, well, so far this month we're in the first month, so you can't add one contract per month. But if you were to quit trading when you get your goal for the day, now we have just hit the level where we could add another contract. All right, we're at $2,000 per contract right now, so we could add another contract right now. If you were doing that, you would have worked only about 6 hours so far this month, and you would have made $2,402 in those 6 hours, so averaged about $400 an hour. Okay. We're at 8060. We did all that. Now, if you've not taken a free trial, go here to mytradingiq.com. Right here, sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Click on that and fill out the page that it brings you to. I think it's this one. Fill out this form. Okay. If you're going to take the trial, you should definitely download the trading platform. When you download the trading platform, you're going to need to give us either your machine ID or your profile name for TradingView or NinjaTrader, and let us know that you downloaded the DT Pro if you did. Okay, because then we will give you your user ID for DT Pro. All right. That's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Excellent.
Recap of the recap.
Today it took 1 minute and 3 trades to get to $250 a contract.
Good job.
Thank you.
Get yourself some rest, man.
I'm gonna.
Okay. All right. Logic 247. For those who are possibly new, Logic 247 is our 24/7 around-the-clock Emini alert service. It opens Sunday night for business at 6 p.m. Eastern when Globex opens, and remains open around the clock till Friday afternoon at 5 p.m. Eastern when the global markets close. We're in week 235, and over those 235 weeks, we've issued over 13,400 individual handcrafted alerts, and we've averaged 20% or less being stopped out, based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a very simple 3-step process that we teach all of our members in their unlimited one-on-one mentoring sessions. You never want to risk more than what you plan to take out of a trial. Okay, if you're trading an alert and you plan to stay in the trade until the second target or the third target or the final target, on a long, the final trade to target will always be the weekly zone overhead. On a short, it will be the weekly zone below. That's when you're able to risk up to a maximum of $300 per contract per trade. But you should know, if your goal is simply to take 2 points out of a trade, then you can only risk 2 points. Otherwise, it's bad math, bad science, and it will destroy your trading business. Since the markets opened last night through 6:45 a.m. this morning, this is when Valerie posted the recap. She will update the recap late this afternoon and then again late tonight. But as of 6:45 a.m., this is where we stood. We issued 12 alerts since the market opened last night at 6 p.m. Eastern. One never triggered. We were still waiting on 2 at the time. It gave us 9 actionable alerts, of which 1 or 11% would have been stopped out based on that maximum risk profile I just explained. Now, the logic alerts are based on current price action. However, there's time built in to the alerts because the purpose of the alerts is a training tool. You get the alert, you go study the 30-minute chart and look for the window of opportunity. You've got the alert, you've got your 30-minute chart, so you know where the opportunity exists. You simply have to exercise patience and self-discipline for price to get to the area, to the entry that's in the alert. The alert has an entry, the alert has an initial target. That's if you're just looking to get your goal for the day. Often there'll be a second, third, fourth target, and then a final trade to target. So before you enter a trade, you need to define what your target is, because you cannot risk more than now, a lot of the alerts may have $800, $1,000, $2,000 of potential profit. But if you know you're going to jump out as soon as you get your 2 points, and there's absolutely nothing wrong with that, you just have to make sure that you don't risk more than 2 points. Okay? Now again, current price action. However, you will typically have anywhere from 20 minutes to hours before the Logic 247 alert actually triggers. In fact, for those new, who don't know what an alert looks like, I'll show you. Last week week 234. We issued a total of 58 alerts. 13 never triggered. We had 45 actionable alerts, of which 3 or 7% would have been stopped out based on that risk profile I just explained. And now we're in week 235. First alert out of the gate last night was a short on the ES. However, it didn't trigger for quite a few hours. The idea was to be short 40.72, the initial target 40.70. That gives you your 2 points or your goal for the day. If your plan is to get out at 40.70, then you can't risk more than 2 points. If you think the market is going to continue lower, then you can risk up to a maximum of $300. I don't care if an alert has $10,000 of profit potential. You don't want to risk more than $300 per contract per trade. If you have to risk more than $300, that's 6 points in the ES, then you should just be patient and wait for a better trade opportunity. So the initial target gives you a goal for the day, and then potential support, target number 2, potential support, target number 3, and then the final trade to target is the weekly trading zone below. Now, the weekly trading zones come out Monday morning at 6:15 a.m. Eastern. So all alerts issued on Sunday night are based on last week's zones. Once the new zones are published for our members at 6:15 a.m. Eastern on Monday, then every alert going forward is based on the new weekly trading zones. We've published the zones since December 14th of 2009. So we've got over 13 years of data on how price behaves around the weekly zones. And the one thing that's changed since we first published the zones way back in 2009 is absolutely nothing. One of 3 things happens at a zone. The most common is consolidation. That's about 70% of the time. The second most likely is rejection, about 20% of the time. And the third and least likely is the slice. That's when price slices through a zone like it's not even there. When that happens, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So this was alert number 13,425. At the time Valerie did the recap, price had dropped to 40.40. So it had come within 1 point of the trade to target. So if we take 72, there's my calculator. Why would somebody take my calculator? Well, the good news is I have a number 2 lead pencil. 72 minus 40. So that's 32 points at $50 a point. Hey Alexa, 32 times 50.
32 times 50 is 1,600. By the way, you can thank the driver of your most recent delivery, and we'll share your appreciation with them. Just say, thank my driver.
Thank my driver. It's the first time I ever heard that. So, that's how you determine what the potential profit in a trade is. From the entry to the final trade to target. Now we just determine that's 32 points. So for 30, if you're going to stay with the trade until the chart tells you to get out, then you can risk no more than $300 per contract per trade. Even though there's actually 33 points available in this alert. But if your plan is to get out at the initial target, just grab your goal for the day and go do life. Just make sure you don't risk more than what you plan to take out of the trade. So you have to define before you enter a trade, where's your target? Are you going to stay with it? Or are you just going to take your 2 points and go? There's nothing wrong with that. That's why I designed it this way. Okay. Then we had a short on the Dow. Sell 33,950. Down to 33,755. And at the time, Valerie did the recap at 6:45 this morning. Price had dropped to 33,774. So it hadn't quite got to the weekly zone. And again, because these were issued last night, they're based on last week's zones. Anything issued today after 6:15 a.m. Eastern, that's based on this week's zones. On the Russell, we had a short at 1910. The weekly zone below was 1900/1901. We dropped at the time of the recap to 1899.5, so we overshot the target by a little bit. Basically, that's 9 points at $50 a point, $450 per contract traded. Short on the NQ from 12,140 to the initial target. Now this is the only one that differs. The NQ is so volatile. The initial target is $200 per contract trade. From 12,140 to 12,130, that's 10 points, $20 a point, $200 per contract traded. If you've earned the right to trade 10 contracts, then it's $2,000. Okay, that's all spelled out for our members in the 2420 blueprint. So at the time of the recap, price had dropped to 2053, and then it continued dropping. We'll go to the charts in a little bit and we'll take a look at each individual market. We had a short on crude. We had a short on gold. We've rolled to the J contract. This is one we were still waiting on at the time Valerie did the recap. We had a short on the 6E or the euro. We had a stop out on bonds. I duplicated a trade apparently. Yep. Yeah, how that happened. But anyway, Valerie caught it and she marked it appropriately. It's the same trade twice. And then we had a hedge on the euro. Got a thumbs up. So, if there's a red X, that means it was stopped out. Thumbs up means it made it to the target. Z's means typically that it didn't trigger. In this case, it didn't trigger because it was a duplicate of a previous order or alert. And then we had a hedge on silver. And then we rolled into this morning, and so far today I've only put out 2 alerts, one on the NQ, which I know triggered, and then we had a short on the ES. Okay, so that's what the Logic 247 alerts look like, and we've issued a total of 13,438 individual handcrafted alerts. Again, the Logic alerts can come out at 2 a.m. or 2 p.m. whenever opportunity presents itself. Futures trade around the clock, and we have traders around the globe. So, no matter what part of the world you're in, don't worry, you'll be taken care of, just as if you were here in the U.S. On the other side of the pond, their day session is our night session, and vice versa. Now, along with the logic alerts, which are designed to help you spot windows of opportunity in the market. Some people will just trade the alerts, make money, and never bother to learn how to trade. Okay? That's a poor decision. You have an opportunity to learn a life skill. You want to get to the point, or I hope you want to get to the point, where you never need anybody to tell you when to get in and when to get out. The chart will tell you when to get in and when to get out once you understand what the chart's telling you, what the indicators are telling you, and you'll learn all of that in your unlimited one-on-one private mentoring sessions. The passport is for life. There's no recurring fees, there's no upsells, there's no new shiny objects to buy, ever. Once you purchase the passport, you have a lifetime access to everything we do, everything we've ever done, and whatever we do in the future. When we rolled out on TradingView here over the past year, how much more did our passport holders have to pay to gain access to the TradingView platform and our indicators on the TradingView platform? Because we've always said that you can use our strategy and indicators to trade not only futures, but stocks, crypto, forex. So we made that a reality for our members last year by getting our indicators onto the TradingView platform. And how much did passport holders have to pay for that incredible upgrade? Not a dime. You pay once, you have lifetime access. No recurring fees of any kind, ever. Now, our original alert service, the concierge trade alerts, they're a little bit different than the logic alerts. Concierge trade alerts are published shortly after the Globex Open. Globex opens at 6 p.m. So this static report was published at 6:15 p.m. last night. So all of our members had these numbers at 6:15 p.m. Eastern. Even if you're on a trial, you had access to the numbers. Now, it's better to get your goal for the day on the way to the CTA number. Once price trades through a CTA number, it will quite often trade through it multiple times. So my best advice is simply get your goal for the day on the way, and the logic alerts are based on current price action. CTAs are based on historic price action. And when current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. It's not an either or situation because the two work hand in hand. Important to remember. Now, we cover all the same markets with CTAs as we do with the logic alerts. Once published, these numbers are good for the entire session. When the numbers are published, go to the 30-minute chart of whatever markets you trade and draw a line in the sand. In the case of the ES last night, you'd have drawn a line in the sand at 41.15 and a line in the sand at 40.66. Also, on your 30-minute chart, you want to make note of where price is at the time this report is published. Once the report is published, going forward, if price gets above the BBC on the 30-minute chart and starts trending higher, our strategy will naturally look for opportunities to be long the market. On the other hand, if price gets below the 30-minute BBC and starts trending down, that's bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you use Logic 247. Everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market. Now, because this broadcast is open to the public, there may be people in the audience that don't have these numbers. If you're a member or on the trial, you got them last night at 6:15. So if you want to grab a screenshot, do that, and then we'll go to the charts. And we'll start with the daily chart, as we do each and every day. Posted a chart this morning in the discussion group showing why the market was struggling to move higher. The 50% reverse fib. We've been in a downtrend since March 29th of last year. The low of the downtrend was put in on October 13th. Right here. Now, we're closing in on a year of a downtrend. There have been numerous opportunities or attempts to break out of the downtrend, and all of them have failed spectacularly. How long will this go on? That's based on the institutions. The institutions, the hedge funds, the Goldman Sachs of the world, it's their trading that actually moves price. Their accounts are denominated in hundreds of millions and billions of dollars. The typical retail trader has an account denominated in thousands or tens of thousands of dollars. And so it is the institutional commitment, the institutional money that moves price. It takes financial commitment for price to rise. All it takes for price to fall is for the institutional buyers to hit the pause button and step back for a minute. The fact Friday that we managed to trade above the 50% reverse fib, we closed just above it. But that wick was a sign of weakness. So we know the resistance is at the 50% reverse fib, the high of the current session, and then the high of Friday, which was 41.09 and a quarter. Price is sitting on top of double support, blue and climbing, and the daily step line. If price trades below those, the next area that we expect support is the 24% fib extension and then the 38% reverse fib. Whatever market you trade, whether it's the S&P or Amazon or Bitcoin or the British pound, when you get ready to trade, you should spend 2 minutes looking at the daily chart, because institutions look at the daily, weekly, and monthly chart the way you and I might look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it all has to do with account size. So by understanding what the institutions are doing or not doing, and are they putting money to work here to drive price back up? We're a little bit off the low of the session, okay, but we're still sitting right on top of this support. A nice window of opportunity would be about 40.23 down to the daily BBC. Could we get stuck in this area for a period of time? Yes. Here's an example at the 38% fib extension. Let me look at how many days we straddled that thing. That could happen here. Here we got rejected at the 50% reverse fib. Here we traded above it, closed below it. Then we managed to get above it. We had a green candle close above it, followed by a red candle, another red candle, and then that took us all the way down to the 24% reverse fib. Price got back above the VBC, gave us a leg, and a retracement to the VBC. The pullback holds more often than it doesn't. So we get another leg with a slightly higher high. We pull back to the VBC, the pullback holds, and then again, we made a run at the 50% reverse fib. And we discussed last week, every day, the potential for the market to find resistance there. So, this is a major inflection point in the market. Will the support hold or not? If it doesn't hold, that's a pretty big window of opportunity there. Oh, from about 40.25 down to 39.93. That's an area. If price enters this window of opportunity, it'll probably go about halfway through, pull back to the top, leg, retrace, and then another leg, taking us down to the daily VBC. However, if buyers get committed and are willing to put money to work, remember, it takes financial commitment for price to rise. If that happens, resistance at the high of the day, resistance at the high of Friday. Now, Friday's high, although we didn't close there, it took out the high of December 14th. So the next obstacle above Friday's high is the high put in on December 13th, up at 41.80. So that's what you want to do with whatever market you trade. Look at the daily chart. It's kind of like sticking your head out the window. Is it raining? Is it sunny? Is the wind blowing? Snow falling? What's going on? Now you're ready to go to your smaller time frames and take the appropriate trades where you have the wind at your back. Here's the S&P 30-minute chart. The vertical line separates today from Friday. Back here's Thursday. Okay. So here's where the market opened. Price got below the VBC. BBC simply stands for bull, bear, cross. When price crosses above it, we're bullish, we anticipate higher prices. When price gets below it, we're bearish, we anticipate lower prices. Now, everything I said about the daily chart and everything I'm saying about this 30-minute chart, everything we teach, every tool we offer, is fluid across all markets and all time frames. When you go from the S&P Emini to Amazon or Bitcoin or the British pound, no rules change. The settings on the indicator don't change. They're fluid across all markets, all time frames. So during this first 30-minute candle, that's when the CTA numbers came out last night, and price traded right down to the target at 40.66. It then continued down to last week's weekly trading zone at 40.38/40.39. The low was actually 40.40, so it came within 1 point. Price then got back above the CTA number. I mentioned this earlier. Once price trades through a CTA number and finds support, when price drops to a weekly zone, we expect support. When price rallies up to a weekly zone, we expect resistance. We found support at the zone, got back above the CTA number, triggered again. However, there's a huge difference between this move and this move. Here you have the BBC below the short CTA number. And so we only go long when we're above the CTA, or above, we only go long above the BBC. We got to wait for price to get back below it. Red and falling. See how red and falling walked it all the way down, and then as the step line crossed red and falling, that's your first indication that price is going to attempt to pull back to the BBC. And it did, and it held. It spiked it, but it held. So then price gets back below the BBC. Blue and climbing turns to red and falling. And where would you expect the market to find support? At this point, right here, the previous swing low. It's an opportunity of 40.43 down to 40.40. On the Dow, here's where the market opened last night. Below the BBC, we got red and falling in place. Once the CTA numbers come out, it's just a matter of getting short. If you want to just grab your 2 points for the day, that's fine. If you want to ride it all the way down to the target, that's fine too. Once price trades through the target, there's a greater probability of it getting back above the target and doing it again, getting back above the target and doing it again. Now we got above the BBC. We made a run to the upside, but buyers lost their enthusiasm. We're now back below the BBC. If price gets below this swing low right here at 33,892, then you'll have a very nice opportunity from about 33,880 down to 33,850. It's 30 points, $50 a point, $150 per contract traded. On the Russell, here's where the market opened. Got red and falling. This indicator is actually called the CFMA1. That's the technical name. I just refer to it as blue and climbing and red and falling for what hopefully are obvious reasons. Okay, we've got price, the step line, blue and climbing. It's bullish. But then when blue and climbing rolls over and turns to red and falling, and price closes below the BBC, then you should anticipate lower prices. And where did the market find support? At the zone. Did it hit the target first? Sure. Anywhere in here, on your smaller time frame, your 7-tick range that Michael trained you on in the live training room, all you have to do is look for a pullback to the BBC, a down close, and go short. Because you already know, big picture, where the market is most likely to find support. When price drops to a zone, we expect support until proven otherwise. Now, of course, members and those on the trial already have the new numbers for this week. But on Monday, and sometimes into Tuesday, the old zones from last week will still hold sway over the market. So you don't want to throw them out. Okay, get the new zones on your chart, but then keep a notepad handy so that you remember where last week's zones are. In fact, this week's zone's 1901/1902. So it's just above last week's zone. Okay, so we've come down and hit not only last week's zone, but this week's zone and bounced off of it a number of times. price just keeps coming back down. That's because there's a lack of commitment on the buy side among the institutions. Got the Fed on Wednesday, so they'll be posturing and positioning for the markets. Could get quiet and sideways as we head into the Fed. We expect another rate hike. How big? Well, we'll find out on Wednesday. So you had all this room from 1913 down to 1905. 8 points, $50 a point, $400 per contract traded. And then once price traded through the CTA number, 1905 took us down to we'll call it 1901. 4 points and another 4 points. Then blue and climbing enters the picture, okay? And so you've got to wait for price to get below blue and climbing to start shorting again. You know you got a zone for support here. So this is not a good window of opportunity. Wait for blue and climbing to turn to red and falling. Just like this. Friday how we climbed, and then last night as soon as we opened, markets headed lower. Got this bounce right here at 10 a.m. and it failed. On the NQ, here's where the market opened last night. Got red and falling overhead. So you don't want to go long, because red and falling is an indication that lower prices are coming, just as blue and climbing is an indication that higher prices. See how on Friday price ran right up. That was the highest weekly trading zone last week, 12,300. And we hit it when price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. Right there. Trading's not easy, but it can be simple. Just remember, the market's always right. So we didn't attempt to create a strategy or a set of indicators that's going to outthink the market or beat the market or any of that advertising nonsense. We simply want you to be able to identify what the market is doing, be aware of the potential obstacles to what the market's trying to do, and then all you have to do is do what the market's doing long enough to get your goal for the day. Because again, the market's always right. So this move down on the NQ, if you were cautious and wanted to wait to get below that low right there, let's say you entered at 12,150. Oh, by the time you got to, let's see, 60, 78 points. Hey Alexa, 78 times 20.
78 times 20 is 1,560.
$1,560 down to the target. And then we bounce, hit the target again. And then we bounce. See the little wick right there? And then down we go again. From 82, this move actually dropped to, we'll call it 40. So that's 42 points, $20 a point. It's over $800 per contract traded. Here, even though this turned out to be a profitable trade, you've got blue and climbing right here. So you don't want to short into blue and climbing. The price closed below it, then you could have entered on the open of this candle at 12,053, and it dropped to 11,982. This was a red candle all the way down. Buyer stepped in, drove it back up. Balloon climbing turned to red and falling. There's another opportunity and another opportunity. Keep it simple. If you keep it simple, you won't have that knot in your stomach. You won't wake up wondering, is today the day I lose my business? Is the day I blow it all up? The 24/20 blueprint will teach you to write a business plan and a trading plan. 9 out of 10 new traders don't have a teacher, a live teacher every day. Nor do they have a business plan, nor do they have a trading plan. In order to become a consistently profitable trader, you need those 3 things. 9 out of 10 traders, new traders, fail because they don't know that. They buy a book, they watch some YouTube videos, and I got nothing against books, and I got nothing against YouTube videos. But they're not a replacement for a live teacher. Putting on, taking off trades live in real time, explaining every move they make, every trade they take, and answering your questions while you trade along in the simulator at first so that you can learn the strategy. You need to put together 10 consecutive days in a row in the simulator before you even consider trading real money. There's no overnight riches here. This is no get rich quick scheme. Like I said at the beginning of the broadcast, if you don't have patience, self-discipline, and you're not willing to do the work, you should look at some other job opportunity than trading. Because trading requires a number of things: patience, self-discipline, a teacher. Imagine going into any profession: plumbing, an electrician, a brain surgeon, a lawyer. What's the first thing you've got to do once you choose your career path? You got to find somebody that's willing to teach you how to do the job. That's why for 2 hours every trading day, that's exactly what we're doing. Teaching you how to do the job. And you're receiving alerts around the clock so that you can learn to spot windows of opportunity yourself, so that you can ultimately become self-sufficient. You don't need anybody to tell you when to get in and when to get out. In the beginning, in the early stages of your learning, you do. But you want to get beyond that. You want to be able to simply look at the chart and know what the next high probability move is. What's the next high probability move here? Hopefully it's obvious. $78.20 down to $78. It's $200 per contract traded right there. If you're a 10 contract trader, it's $2 grand. Don't put the cart before the horse. Do your 10 days in sim where you reach your goal in 10 trades or less. When you go live with 1 contract. Once you're trading real money, then your goal is to increase your account balance by $2,000. Once you've accomplished that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is the first contract's funded with your startup capital. The second contract is funded with profit you earned in the market. The blueprint will notify you when it's time to add number 3, number 4, number 5, number 10. It's called the 24-20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Once you go live, you only add one contract at a time. You only add with profit you earned in the market. If you have the self-discipline to follow that, it makes it far more difficult to blow up another account. Okay, we have rolled gold to the J contract. So trading's just kind of consolidating sideways here. We opened right at the weekly zone, got a little bounce to the upside, and we moved down to the short target right here. Then back up to the zone, back up to the zone, resistance, 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 resistance. And this move here, now that we have red falling, again, once we take out this low, then there's this low that's potential support, and then you've got the new weekly zones to work with. Silver, kind of the same thing, sideways consolidation. We reached up to the zone overhead and found resistance, 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 but we've not. Now, the support here comes off this bullish cross. When you have a bullish cross that leads to an extended move, or a bearish cross that leads to an extended move, first time price revisits that area, it will most likely, in this case, be good support. And it has been for the entire session. On the euro, here's the open. We made a run at the long target, came a little bit shy. Then we got below the BBC, and we made it to the short target. Plenty of opportunity to get your goal for the day there. And last but not least, the bonds. This is where we opened last night. We pulled back to the VVC. We caught a bounce, but it wasn't quite enough to take us to the long target. Then we got back below the VVC, and that took us right down to the short target. Then we traded back above the VBC, and that quickly failed. That doji right there is a pretty good indication of lower prices to come, possibly lower than this low here. Buyers came in early off of this low on Friday. Right before price got to that low, buyers stepped in, pushed us up. A leg, a retracement, a leg, a retracement. And we'll see what happens when price hits the BBC. The pullback holds more often than it doesn't. That's true across all markets and all time frames. So back to the daily chart. Same battle going on. Resistance overhead, the 50% reverse fib, high of today, then high of Friday. Support at the step line, blue and climbing, and the low of today. So how we close today will be very important. It's possible we stay stuck in this area until the Fed announcement on Wednesday. That's not a forecast, simply an observation. We had a lot of news, high impact news this week. Always look at your daily chart no matter what market you trade, even if it's individual stocks. Look at the daily chart. Identify the major areas of support and resistance so that as you go to your smaller time frame. See, if you only use the smaller time frame, you get tunnel vision. You lose touch with the big picture. Your smaller time frame may give you a beautiful setup to go long, but if you take that, you're going to run smack dab into weekly trading zone on a 30-minute chart, or possibly the 50% reverse fib on the daily chart. Multiple time frames are the key. A daily chart, a 30-minute chart, and then a smaller time frame to execute on. Michael teaches you in the morning with a 7-tick range. If you want to use a 1 minute, you can. If you want to use a 5 minute, you can. The larger the time frame you use to execute on, the more risk will be required for the trade. So that's where we'll leave it. To get your passport, go to eminifuturestrading.com. Couple mouse clicks and you're a lifetime member. There are no recurring fees, no upsells, nothing new to buy ever. You'll have access to the live training room every trading day. You'll have what 9 out of 10 new traders don't have: a teacher. A living, breathing human being putting on, taking off trades live in real time, explaining every trade, every rule, and answering your questions so that you learn the strategy. The idea of the room is not just so you can piggyback on Michael or Valerie's trades, but so that you learn the strategy. I hear that a lot. Well, people are trying to emulate Michael. What you should be doing, instead of trying to trade with him tick by tick, is you should be trying to understand why he's doing what he's doing, why he did it. Your questions are important. People ask, how long will it take me to learn? It depends. Obviously, different people learn at different speeds, but how much time do you have to commit? And how many questions are you willing to ask? That's the real key right there. The more questions you ask, the sooner you'll understand. In fact, by the second week, you'll find yourself asking the same question over again. You go, oh, wait a minute, I already know that. So if you wait for Michael to tell you at what price he's entering, if the market's slow enough, you may be able to get your DOM set up to enter at that same price, but that's no guarantee it's going to be a profitable trade. What you should be focusing on is learning why a trade is a trade, what the setup looks like, what needs to be in place for you to actually hit the button to buy or sell. That's the purpose of the live room. The purpose of the logic alerts and concierge trade alerts are to give you guidance the other 22 hours of the day. The live training room is open 2 hours, but the markets trade 23 hours a day. Today's the Monday session until 5 p.m. Eastern. Then the markets will go quiet for 1 hour, and at 6 p.m. Eastern, the markets will reopen. And even though it's still Monday night here in the U.S., that's the beginning of the Tuesday session. Unlimited one-on-one mentoring. The strategy you learn and the indicators you own for life are fluid across all markets and time frames, from 1 minute to monthly, from futures to individual stocks to crypto to Forex. As a passport holder, you'll receive the Logic 247 alerts around the clock. You'll receive the CTA report every evening when it's published. And of course, you'll attend the Thursday night members only workshop. The journey starts here, eminifuturestrading.com. Everything a trader needs, all under one roof, at one low price. All right, good word for the day. Friday we talked about handling temptation Christ's way. That was part 2. Part 1 was on Thursday. Today we're going to talk about blending two families. Blended families are much more common today than they were many years ago. 2 Corinthians 13:11, live in peace. Now, the Brady Bunch was a popular television show where mom and dad, the 6 kids, created one big happy family without conflict or rivalries. The problem is, it seldom actually happens that way. So here are 3 challenges you will need God's help with. Number 1, it's common for kids to see a new step-parent as a usurper. Their loyalty to the memory of their departed mother or father can be intense. For them to welcome a newcomer feels like an act of betrayal. This can place the step-parent in a real bind. Number 2, it's common for one child to move into the power vacuum left by the departed parent and see themselves as a surrogate spouse. The status and power that come with this supportive role is very strong, and a youngster can be unwilling to give it up. Number 3, each of us is irrationally committed to our flesh and blood while being merely acquainted with others. So when conflict arises in the family, parents are almost always partial to those they brought into the world. And when children sense this tension between parents, some of them will try to exploit it to their advantage. That's why statistically, 2nd and 3rd marriages have a higher failure rate than first ones. But there is good news. Matthew 19:26. With God, all things are possible. So, if you or someone you know is in this situation, what should you do? You should actually seek professional counseling as early as possible. Yes, it costs, but a divorce will cost you even more. And include God, because He can give you the patience, the wisdom, and the love you need. Live in peace, and the God of love and peace will be with you. 2 Corinthians 13:11. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.